Welcome back to Market Call. It's time now for top picks, and we're kicking it off with Text OTX. That's the ticker on the TSX. Andrew, this is a generally pretty acquisitive company. Why do you like it at this particular juncture?
Well, this is really a valuation play for us. I mean, the stock has lost close to 50%. Page 2021 highs around $70, trading now down around 35. I think the company at these levels, I think, probably reflects any negativity that has been built into this market over the course of 2022. And I think right now, as you see this company continue to expand out its cloud services platform, or the percentage of its revenue base in cloud, I think really sets it up well going into 2023. We typically don't go to Canada for tech. And we have been adding to tech over the course of this year. And again, a lot of that is really similar to our long-term bond view that, having long duration and tech for 2023, I think will be one of the more winning categories to be in. So for us, OpenText is really just a valuation play at this point. Got a target on this stock of probably close to around $50 over the next 12 to 18 months. But we do think that these levels are attractive opportunities to get in.
What do you think the chances are they can, maintain their kind of growth by acquisition playbook in this more expensive these days to raise money to do a deal? What do you think the chances are they can maintain that play?
It's going to be challenging over the short-term page to that point. It's extremely costly right now to raise capital to get involved with acquisition. It might be something that we'll see a pause for a little while to see how things shake out into the first quarter. Keep in mind that a lot of the opportunities that OpenText might be looking at have also cheapened up in the last little while. So, it's kind of weighing the cost of capital to, what's the cost of the acquisition in terms of the company that we're looking at. So it's not dead. I think you're just going to see a much more selective and perhaps a slower pace of acquisition, at least in the early parts going into 2023.
All right, next up is Boardwalk REIT. Why do you like this name right now? I mean, there's just so much discussion about the slowdown in the housing market. Curious why you've chosen this as your top pick.
Well, I mean, recently we had moved some money into Canadian Department REIT, and then the thesis there is that the housing market is slowing or correcting, which we obviously have seen, especially in the data today. Then you're going to see demand for rent go up, right? As some marginalized and displaced out of housing because of the cost of mortgages, because of the declines in valuations. A lot more people are going to be demanding rental property to move into. And Boardwalk, I think, we're seeing really, really good rental growth or rent growth in Western Canada, which is where the majority of their assets tends to be. And I think that's just going to continue into 2023. So you've got strong demand, strong rental growth on new leases, which I think will really support cash flow and protect the dividend distributions that we're seeing out of Boardwalk.
Okay, and finally, your last topic today is Northland Power. Why do you like this name, NPI, on the TSX?
Well, the clean energy segment of the market obviously went through a lot of challenges. We talked about Algonquin earlier in the program page. Northland to us is really, really attractive, especially in terms of its free cash flow generation. Likelihood that we will see some sell down of assets, which I think will be positive for the company going in 23. I think the valuations right now are very, very attractive. Dividend, not the best dividend on the planet, but still very sustainable, and we do see dividend growth going into 2023. So we're really now starting to piece back into that clean space where we kind of exited from just based on the challenges that were presented, at the beginning of 2022.
Okay, well, there.